Taher Badshah is with us, CIO, Invesco Mutual Fund. Taher, good morning. Good to have you with us here. Thanks very much for your time. And I should start by congratulating you and your team on the transaction. We'll of course have you in the new avatar in that sense. But Taher, how are the markets looking? It's been pretty solid. Although at the margin, some of the earnings preview notes that one is getting is pointing to earnings growth for the fourth quarter, maybe base or whatever, slowing down a little bit as compared to the 9-month FY24 numbers. Q4 perhaps will see a bit of a slowdown. So from an earnings picture, is all well, or you think there is a bit of a slowdown in works?
I think so far so good. Obviously there will be a deceleration in 4Q FY24 compared to what we've seen in the 9 months, as you rightly pointed out, and that I think was there in the mind of the market in any case, because for the full year the projections were what they were, and that implied a run rate which is going to be slower in the fourth quarter compared to what it was in the first 9 months of the year. So I don't think that will probably unnerve the markets as much. But of course we need to kind of we are getting into the result season now, starting today, and we will probably start focusing more on that, and that will be an important deliverable. I mean, market will try to look for at least reaffirmation of earnings trends and continuation of that in FY25 as we go along, particularly from some of the key sectors which have supported the earnings over the last some time.
Taher, hi, good morning. Are you worried about some sort of a major correction in the market? I'm asking because there are some internals that are suggesting that, whether it's the way the US 10-year yield is shooting up, whether it's the way crude prices have gone up, gold is moving up a lot, largely because of, geopolitical tensions that we're seeing between China and the US. Do you think all of that is leading to a phase where risky assets could see a lot of pressure in the second half of the calendar year?
Well, I don't know about a lot of pressure, but I think there should be some pressure. There's quite a possibility because some of the macros have now started to once again unravel, and market will try to kind of once again get into that debate a little more aggressively with regard to whether it is interest rates or the geopolitical scenario and even our own political election-related outcomes, etc. So we're getting into the thick of that. But I think we are also at the same time in the next couple of months going to be in the thick of the result season as well. And I think that will probably dominate the longer term or the medium term picture of the market. So I think at least as managers, we would probably be looking a little more at that. Interest rate related debates, I think, will continue. Up until the time we probably see the possibility of probably no interest rate hikes starting to kind of affect demand and maybe even starting to have some toll on earnings, I think the market will probably remain quite confident. There will be interruptions, punctuations, etc. along the way, driven by some of the macro indicators. But I think the larger and the more stronger focus will probably remain on how the earnings trajectory manifests itself.
Okay, all right. Hi, Taher. Good morning and good to see you. And since you briefly mentioned elections, I want to ask you, how do you approach some of these capital goods companies? Getting into elections, that could be a bit of a lull in terms of activity, ordering activity, and even work on ground. How do you approach them? BHEL, the stock has been a big gainer. I'm looking at their past quarter's operational performance. They're still delivering negative margins. Your view on some of these names, and how do you approach the capital goods theme? Because it's got plenty of a runway ahead, but in the near term, things could be a little bit jittery.
Quite possible. I mean, I think once again, that too is in the budget of the market, in the sense that, people on the street, there have been expectations that there will be a slowdown as far as, or at least a deceleration in the momentum of new order flows, and probably some execution related delays as well as we get into the thick of the elections. So I think that again is somewhere there in the mind of the market. We'll have to see as to what does it do to the shorter term earnings growth over the next 1 or 2 quarters, or the top line growth more importantly. But I think as you at the same time, we will have to balance it out, and we know that the longer term or the medium term picture at least is still pretty okay. Policy is still in the right direction, and probably we can take heart in that. There are some pockets of some of these industrials which have got elevated in terms of valuation. So you basically just do a little bit of weight management in your portfolio and basically try to wait for better entry opportunities or price points. I think that's how we are probably dealing with this space. It's probably we don't really have much to suggest, much to go by the fact that we need to take a dramatically different view compared to what we have been taking for the last some time on some of these sectors.
Okay. We are heading into elections. We are heading into a full-blown budget in the month of July. There is earnings season as well. What do you think will be the biggest trigger for the market from here on to ensure that, this market uptrend continues? What are you watching out for closely?
So I think a couple of things which will probably, be relevant for all of us. One is, we will also be looking at how the monsoon season is likely to fare as we get into the next 1 or 2 months. Initial indications, while quite decent, but we will have to probably see as to what that looks like over the next 2 months. I think the important thing also will be, like as I said, earnings delivery, and markets will look forward to some of those important stalwart segments like industrials, autos, oil and gas related companies, which are supposed to deliver strong earnings. Do they continue to deliver on that promise? I think there will be also expectations around some part of the rural recovery and probably the policy direction of the government, of the new government with regard to the weaker sections of the economy, particularly on the rural side. So I think these are some of the things which are not necessarily triggers, but they are things that we need to watch out for over and above the macro backdrop related matters that we all know about.
Taher, as inflows continue to be steady, right? I mean, you got the latest numbers for them. Sorry.
Yep.
Go on.
Sorry.
No,
so
because for the first time in many months, there is a bit of a shift from small caps, right? Which seems to have happened.
Yes.
Is that very pronounced, and what does it mean for how you manage, or rather not just you, but I mean, if this continues, how some of these funds are managed?
No, I think we all know that in the last couple of months there has been a fair bit of chatter around it, and there have been certain regulatory headwinds as well, which have probably seems to have borne on the flows in the last month as the data shows. But we still can't call it out as a trend, and I think we still, at least from a portfolio management perspective, we do keep getting ideas at regular intervals. Some of them seem to be reasonable. Some of them are good in terms of business models, but probably not very attractively priced. So we can follow a wait and watch approach. I think it's a nice thing that if we are probably going to see some moderation in flows, it will allow us a little more time as managers and investors to be able to take a little more, take a step back and probably try and evaluate them at our kind of prices that we would like, or our kind of valuations that we would probably want to give them. So it's not necessarily a bad thing in seeing some moderation of flows for a few months.
Okay, all right. Just hold your thought, Taher. I just want to point out a couple of stocks. Reliance Infra, the one that got that unfavorable verdict coming in on Wednesday. The stock was down with plenty of sell orders. It appears some part of that has been absorbed. So it was down 20% a piece. It's come off the lower circuit. So keep an eye on that one. And Reliance Power is the other one as well. That's come off the lower circuit. So both those two stocks, just want to highlight the price volume moves on both of them. Taher, later this evening, the big Q is going to be IT. And some on the street believe that this is going to be the phase where the earnings will bottom out. The disappointments start getting priced in and things start looking up. Though in the second half of this year, we have the US elections that will take center stage. How would you approach them, and what's your preference? Some say that, well, the larger ones have a better balance sheet. I'd rather go with them. But the other contra view is that the mid caps, they have a faster, pace of growth that could come up for them. And you rather go with growth companies. Your approach?
I think we are basically trying to use a barbell here, and we are operating at both ends of the spectrum that you mentioned. And there are a few companies that we need to back from a growth orientation perspective, and some of our growth oriented strategies are reliant on some of those names, particularly in the mid cap space as far as IT is concerned. And then there are value opportunities, perhaps a little more in the large cap IT names compared to the mid caps. And for some of our value strategies, we don't have a choice but to kind of look at some of those a little more, and especially if we can live with some of the softness that we are likely to see in the next quarter or so. But if we believe that during the course of FY25, the base will start becoming a little more attractive for them, things can start falling into place. we can probably use the valuation support to be able to kind of buy into some of those names as well. But overall, at an aggregate level, I think it looks like from most assessments that IT budgets are likely to be flat for calendar year 24, and it would therefore imply reprioritization. It will therefore imply some parts of the IT services segment doing better than the others, because within a flat budget, you will try and reallocate to some of the more important activities. So I think then that will essentially drill down into different companies in terms of who are going to be bigger beneficiaries compared to some others. So I think that's how we are trying to make our differentiation. So to answer your question, I think we are operating at both ends of that bubble.
All right, we'll leave it at that. Taher, thanks a lot for joining in. Appreciate your time here on CNBC TV18.